Alrighty. Good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of October 19th. With you, as usual, is Keeve Bybee. Hi, Abraham. Good to see you here. A few others starting to come in. It's good to see everybody. Alrighty. We have kind of another crappy down day. I guess it's technically up now, isn't it? But a few days ago, if I can just zoom in a little bit, 17th, we nearly on the penny hit that 50-day and coming down. And we've got the Fed Chair Powell coming out as we speak with a little interview. And looking at my phone for headlines, it says Powell says inflation is too high and lower economic growth is likely needed to bring it down. Isn't that nice of him to decide that we need lower growth? Mercy and grace. Okay, so I would bet we're going to start seeing this market start to turn. You can see that right after that headline came out. We're now kind of pretty close to flat when we were up a couple dollars. Keep my eye on that throughout our webinar this morning, but I would think that would not help us. And a lot of stuff is positive. You have Apple, Bank of America, Boeing, Disney was a minute ago, and now it's negative. Google, JP Morgan, Meta, Under Armour, all positive. Baidu down 5%. Of course, we'll get to that shortly. So, talked a little bit about what we were looking to do last time, and nothing has changed too much. So I'm not going to, in fact, longer term 10-year treasury yields keep going up. Fed has just reiterated this morning that economic growth is going to be impacted. Talked about last time about what do we use puts for, and I think it was an answer to a question that one of you guys had brought up. We talked about the difference of trading put options versus using puts like insurance. And it's not necessarily a big difference between the two, but there is a different way to look at things. One, you're really just looking at it as insurance on your stock ownership, and trading puts, you're really just looking at making some profit on a directional play. Obviously, you're trying to make profit on both of those strategies, but the first one of protecting stock ownership is more for the what if. What if something happens, it goes down, we can't let our stock just continue to lose money. All right. So this hasn't changed. Again, I'm not going to change that. I am going to talk a little bit about if, you know what, I feel like I need to talk about Baidu first. So let's look at Baidu, and then I'll go with what I was going to talk about. So Baidu, I don't know why I typed that in again, but here we go. We have 127, or maybe they're 129s. I think they're 129 puts. That's going to bother me. I wish I remembered things. Let me look. Got to pause your screen. Let me see what I have on Baidu. And then I'll show you what I was up to this morning. Bear with me, guys. Just a minute. Just looking at all of our shares here on different positions. I know you guys are just seeing a chart there, and that's totally cool. Okay, so we have 127. So that would make sense. $127 puts. I'll show you my screen again. So we got this support level here at 127 that we couldn't hold. As soon as we started to break that on this day, on the 13th, Friday the 13th, with all of the horror associated with that day, we got puts, 127 puts on there. Those have looked excellent coming down. And then we're starting to look at longer term support levels being broken here. So what are those? 110. We made the decision this morning, if we start to break 110, it's time to get a second set of puts on. You can see a little bit of support there, but not as much as 100. These didn't quite get to 100, but it was close enough. It's also just the next round number. So we added 110 puts this morning. So we have doubled up our puts on Baidu, which is looking great this morning as Baidu continues to fall, now below 109. And now is that time where we cheer for it to go down to 80, 100, and then 90, and then 80. So what is happening with Baidu? First set at 127. And man, range between basically 120 and 160 for freaking ever. Okay, maybe not ever, but a couple of months. And despite how well Baidu does on their earnings pretty much every single time, even last time, which looked so good, they just keep getting beat up because of bad news for China. So what is the current bad news? Baidu, several other Chinese companies ordered chips from NVIDIA, and our government said, hey, you got to stop selling. They said, hey, to NVIDIA, you got to stop selling chips to China. And all of a sudden, we're starting to tank on Baidu, who's has an order for $5 billion worth of chips from NVIDIA. So, starting to fall. 5 billion in orders. I'll say Baidu has for chips from NVIDIA. Those chips are already purchased and will have to be delivered or the US government will have to pay that 5 billion to NVIDIA to reimburse them for what they would have made. So we have an overreaction once again of people thinking, oh my goodness, that Baidu is going to be out 5 billion. If NVIDIA is required to give that 5 billion back to Baidu, NVIDIA will have to be reimbursed from the US government, which has set aside around 60 billion or something for shoring up our chips for sovereign, not sovereign, but for US security. So it's all a bit of an overreaction that it's coming down, but what is not necessarily an overreaction is if NVIDIA is going to stop producing chips to China, and which obviously includes Baidu, then the future outlook is not so good for Baidu. But what do Chinese companies pretty much do all the time? They'll just copy and do it themselves. So that's the situation. That's what we're dealing with. What are we going to do about it? Obviously, we added 110 strike puts, so we have two separate sets of puts. We'll look at 100 as our next stopping point. We start to bounce on 100. We will cash in our 127 strike puts. Hold on to those 110s until we can see that it's a bounce that's going to continue. But likely we'll just leave them on for their earnings coming up on, I believe, the 21st December, or excuse me, November. That's what we have so far. Sometimes that changes a little bit. Let's see what the NASDAQ.com says. I don't know if I had said Baidu or Nvidia earnings, but I meant Baidu if I did. So November 28th now. Good thing I moved our new puts out to December 1st. Let's move this guy to November 28th. Trying to come back a little bit. So that's what we're doing. If I was going to look for a trade, it would probably be something similar to this, which would be to protect your shares of Baidu. You could also look at a trade in puts on Baidu for trade's sake to see it go down to 100 and then take those off. So just filling in what I've just said. And that's what we're looking to do. Let's look again at our S&P. Oh, not down further, back to positive. Which is very weird. So I guess we'll have to see what else Fed Powell is saying. That might be influencing what's going on right now. All right. So this brings my next point, and this is going to be quick because I've spent the time I've spent. If I was looking for a bargain buy on stocks, what would I look for? And just thinking outside of myself more, if I'm a regular Joe, somebody looking to really take advantage of some of the sell-off, some of the bargains on stocks that are fundamentally sound, goodness gracious, I would be looking. Bank of America's come up a bit, but man, with how good Bank of America and JP Morgan did on their earnings with higher rates helping them a ton, it would be silly not to look at the banks, specifically these ones that have never been in any real trouble of the disaster of the Silicon Valley Bank and the smaller regional banks have had. You'd have to be looking at JP Morgan going back up to 175. Bank of America, where was their high? I gotta look on my, I think it was 45 recently. Yeah, it was 47. I would be looking at Boeing, going back up to 400, which goes back a couple years before the pandemic. Baidu, you might need to be waiting to see how the current scenario plays out, but geez, it's fundamentally sound company that's just getting beat up for outside reasons. You'd have to be looking at Disney, trading at around 85. Going back up to 205, it was 203 or 5, something like that. And I'll say at, I got to put the current price as 146 at 27 for Bank of America. At 185 for Boeing. I think it was like as high as 350 on Baidu. Yeah, 350. Have to be looking at, let's see, Under Armour. $27. That was 27, 28. So 746. Disney's at 85. Gotta be looking at Micron. Getting back up to 95. So let's do our math. This is pretty simple. 175 minus 146 divided by 146, 20%. Maybe not as high as some of these other ones we're going to get to. In fact, I never did check. Where was the high on JP Morgan? 160. And 75 was probably a few years ago. So maybe JP Morgan, not as big of an opportunity. I'm just going to take that one off. Bank of America, though. So let's see, doing my math. Obviously that's 20, gives us a 74% upside. $400. 116% upside. Baidu 350 minus 110 divided by 10. Let me try that again. Freaking ridiculous here. That is 218%. This is 141%. This one is 261%. Micron gets us up 40, almost 40%. Mercy, Under Armour's the big one. Baidu's the next one, but Disney, a good Warren Buffett style stock that could get back up to 142, or excuse me, can go up 142% back up to 205. I think it was actually 203, but not a big deal. Close enough. Any questions, guys? Just wanted to kind of let you see what some of the upside is on these, and institutional investors are going to be having to look at some of these opportunities and going, we got to be a part of that. Just too good to be true. Any questions, thoughts, anything else you'd like me to look at? All right, guys, not seeing any of it. Not seeing any questions. Hope I gave you enough to chew on for the week. Baidu is becoming more and more of an opportunity, and see where they are at post earnings, and they could be driven higher significantly. I also didn't mention that we had leap long calls on Baidu at 140 strike that we had to take off as well this morning. So we'll get back some of that money and reconfigure those out for lower strike price further out in time. See if we can't make something back on those. All right, guys. Thank you for joining me this morning. Have a good rest of your week and a good weekend. Look for possibly an email with a recorded webinar for Monday night, as we're having some scheduling conflicts. Not sure how that's going to work for us, but either Kevin will do a recording or he'll do a live webinar Monday. And so check out your emails, keep an eye out for what we might need to do there. So all right, that's it. Thanks, Abraham. Thanks for joining us. Thanks, everybody. Have a good one. Take care.